you design your tactics for that attainment and specify when you are trying to accomplish the goals, you are concentrated on that specific part. All this is made possible through budgets and budgetary control and standard costing, which are integral part of a management accounting. Next point is use of qualitative information. The qualitative information does not have its vital importance in the case of decision making by management. Management accounting does not limit itself to accounting data for assisting the management in decision making, but also uses such information which may not be capable of being measured in monetary terms. So maybe many times you may not be actually try to convert all the part of information in a monetary form. Such information may be collected from a special field in house surveys, statistical accumulations and other type of records. Here now we move, the next topic is concept of management accounting. Now see, the concept of management accounting is the rule of the game of management accounting. It helps and guides an accountant in presenting his responsibility. Many of the conclusions drawn on the basis of it depend to a greater extent upon the intelligent interpretation of data, and because of which it may be given a direction only under exceptional situations. The general practice which have been adopted by the management accountants to deal with an exceptional situation from time to time have not taken from the form of conventions. This is maybe taken as direction while management accounting is required. Now see the few points related to the concepts of management accounting. First is, at the time of recording transaction, accounting should be made limited to business transaction only. So that means only business transactions are concerned for management accounting. Cost and revenues ought to be matched as far as possible. So try to manage the cost and revenues because of the two main important things in the business organization. One is the cost and other one is revenue. The methods and procedures, also principles, should be reliable and consistent. Next point, all anticipated profits should be credited on realization basis, while losses should be granted in advance. Another point, all the accounting revelations, whether relating to a past, present or a future, should be evaluated to meet the special needs of the system. Another point is, capital employed should be kept intact at present price. The capital employed is very much important, a part of financial accounting as well as a management accounting. Management accounting information should be integrated and must be futuristic. Why? Because of integrated, it means it is actually a concern with all the different areas, and futuristic means what you want to do it in future, how you can do it, what are the plans, what are the think of in your what you are thinking in your mind to run this all the steps one by one with the department's correlations and ideology of your system. Direct cost should be allocated to cost centers and it should be recovered from products. And one more point, the object of control at source accounting is necessary to be followed. This is the part of your concept of management accounting. Now we move the last topic of this chapter, that is limitations of a management accounting. Although it is helpful in providing guidelines for planning, directing, and many other functions, its effectiveness is still limited by a number of reasons. As the always you can say the benefits and advantages are there, simultaneously you have another side of a coin, that is the limitations of the system. So we need to analyze and understand the limitations of a management accounting. Unless these limitations are taken into account while using the management accounting system, the so-called benefits of management accounting cannot be availed. Let's begin. First point is based on accounting records. Management accounting is purely dependent on secondary data. It means if the financial accounting and cost accounting are not providing a systematic and reasonable information to management, then the management cannot take a proper decision. It is mainly concerned with the rearrangement or modification of a data. The data used for making the future decision is historical. The correctness of the managerial decision will depend upon the quality of data. If the financial data collected is incorrect, then management accounting fails to provide the right decision. Next point, constant efforts. The conclusion and decisions drawn by the management accountant are not executed automatically. It means there is need for continuous and coordinated efforts of each management level to execute these decisions. That means the continuous effort, constant efforts, more concentrated your vision, and then you can try to resolve the problems. Widespread knowledge. This is the third point. It requires the knowledge of a number related to subjects. Management should have thorough knowledge of accounting principles, statistics, economics, principle of accounting to have an efficient management accounting. It means if you don't have such type of information and then you are trying to resolve the issues, maybe your accounting records are wrong and then your decisions are always to be reflected on that basis. Next point is expensive system. As the limitations are always said, it is very expensive. Here it is also concerned with that. The installation of management accounting system requires a very complicated organization and several rules and regulation. This results in a huge investments which only a large scale entity can afford. Absolutely, it is made possible because of the management accounting requires a lot of stuff to understand, to analyze, to gathering, collecting, directing, maybe designing, or many other things, and that is why the management accounting is little costly. But as well as it would be very much important, the costly system would get some good decisions converted into more amount of profitable decision also. Next is resistance. Setting up a management accounting system requires basic changes in the organizational setup. New rules and regulations are also necessitated to be framed, which affects a number of workforce, and hence there is a possibility of resistance from some quarters or year. Next point is incommensurability. Management is only in the progressive phase. The techniques and tools used by this system give fluctuating results. Its conventions are not as accurate and established as of other branches of accounting. The conclusions taken from analysis and the interpretations are not the similar. So this is all about limitations of a management accounting. I hope you maybe enjoyed the first chapter video lectures, that is Introduction of Management Accounting.